You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
Welcome back to our ongoing series of content live. At least it's supposed to be live. Looks like the live servers are not playing ball with us right now. So this one's going to be live to tape from the Options Industry Conference. Hopefully, if you've been listening on demand, you have not yet heard any of my, you have not yet heard any of my conversations with the folks here from the conference. But if you have been on the pro side, you've had some live streams already, and you've been able to join in on some of our conversations. That stuff will be hitting the pro fairly soon, so keep an eye and an earlobe out for that. Of course, if you want to check it out for yourselves, theoptionsinsider.com/pro. We had a lot of great people rotating through the studio this week, so it was a good time. Also, I just picked up the panel audio from OIC 2026, so if you want to hear the Flowmaster in all his glory, as well as everybody else that talked here at the event, and you want to save, I don't know, a few grand and registration and travel and everything else, we got you covered. Stay tuned to the network. That stuff will be hitting in a little bit as well. So a lot of great content coming from OIC 2026. But now I'm pleased to say, joining me in the same room, it's a rare treat when we get to do this in the same room, none other than the Flowmaster himself, Mr. Henry Schwartz, hot off his state of the industry and looking to crunch more data. Mr. Flowmaster, how are you doing? Are you exhausted from going around the globe being Mr. State of the Industry, sir?
Well, I'll tell you, it's been a whirlwind of travel. I got to go to Brazil to talk about data, and Nashville, and now OIC. and it's been great. I mean, we have so much activity in our markets. I love the fact that people trust me to bring them the data and rely on me, and even some of the exchange leaders basically come to me and say, "Listen, I just want to double check. What are we looking at in terms of average daily volume for indexes or ETFs?" So yeah, I got to run a great panel, which was a little mix of state of the industry plus some experts who I was thrilled to basically be able to kind of bounce questions off of. And I think this is probably my 21st or 22nd options industry conference. This year, their record attendance, 465 people.
I was in my own private conference for 3 days. I didn't get to see everybody, but it seemed like there were a lot of people floating by my window.
It's been good. And you know what? It's nice. I believe they said about 100 people are brand new. So it's nice to see new blood. I don't know how many new firms are involved. I do know we are seeing some new startups as well, and even some market maker growth, which is great.
We tried to focus on some startups here this week, so there'll be some of that hitting the network. Some interesting stuff doing, AI chatbot brokers. We had the boys from Brazil in here talking about options, what's going on there in Brazil. So there is some interesting stuff cooking out there. And then also joining us, the man who will never come to this conference because he never leaves the friendly confines of St. Charles. None other than Uncle Mike Tosaw. Uncle Mike, do you feel like you're missing out on the big party?
I typically do, but we have our own party here in St. Charles. We always have the noon hour listening party that goes through. We shut down St. Charles every Monday and Thursday at noon, so that way we can listen to the option block. So who would ever want to leave this party?
Who would ever want to leave this party? Indeed. And let's get that party started, listeners, with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we do just that. We break down what the heck is trading. Let me just say, this conference, listeners, if you've ever been to these types of events in whatever industry you're in, it's a whirlwind for multiple days. It's been actually kind of refreshing for me because as interesting as it is to be at a markets-focused conference, there wasn't a lot of talking about markets. There was a lot of talking about other things behind the scenes, and as opposed to the day-to-day minutia of where is the S&P today, where is VIX. It was relatively refreshing. Gave me a bit of a break from the endless litany of, new all-time highs on absolutely no new information. So it was good. It was good for my psychology, good for the soul, if you will. But now I'm getting dragged back into the muck as the S&P is at 73.5. Again, I go away for a couple of days. The market blows. Forget about 7,200. That's old news now. 73.5 was threatening new all-time highs earlier today. Now it's off about 0.25%. Dow off about 0.5%. NASDAQ hunched. VIX cash 17.25. As if any of those numbers make any sense. They don't, but nonetheless, we will endeavor to break them all down. Let's get Uncle Mike going here first, because Uncle Mike, you're kind of our resident market guy for this week, because Henry and I have been busy. We've been busy fighting the good fight on your behalf, sir. So while we rest up a little bit and the Flow Master prepares for the massive data dump that's about to come to you, listeners, Mr. Uncle Mike, sir, catch us up on another mad week in the market. What did we miss?
Well, a lot of stuff went higher, to sum it up.
There we go. Show's over. We're done.
And, earlier today, there's never been a better time to sell in the history of the entire stock market than probably around 10 a.m., just right before 10 a.m. Central Time today. But we're actually about 37 points off of the all-time high from there. So I really can't say it with the same excitement. And I got to be honest, the other day, it's not often when the all-time highs happen during the show. And it's not quite as exciting if it doesn't happen during the show. So I don't know where I'm going to be going with this in the future, but I'll definitely announce it every time. But there might be some modifications to the excitement in the tone of my voice upon all-time highs with the S&P 500 going forward. But I digress. So we've definitely had quite the up week this week, to say the least. It sounds like we might be close to a deal with the Strait of Hormuz. We might not be, or whatever the case may be. But in terms of where we closed last Friday, we closed at 72.30. We are at 73.45 right now. So we're up almost 2% on the week. And that's even with a little bit of a pullback that we've had today. And by today, meaning you're in an up market when I just said the word pullback in reference to us coming off the all-time highs a few hours ago. That's how bullish this market is right now. So we have that. Obviously, the Middle East is the big news of the week, if you will. In terms of bonds, of where we've been so far this week with bonds, we're actually up slightly on the week with bonds. Nothing too much, but we are up very slightly in the bond space, if you will, both with the short term and long term, but not a ton of movement there. With the shiny stuff, my beloved silver. In looking at that on the week, we are up slightly with that. I shouldn't say slightly, it feels like slightly. It's only up $4 from 68 to 72, but we do have that. So the big news in terms of where we were this week, I believe that it was on yesterday when we had the 100-point move in the stock market. A lot of this is on news of the potential ceasefire, or not ceasefire, but the potential deal that's coming close, of where we are. Who knows what's really happening? But with where it is right now, the market seems to be overall happy with what's happening because the S&P is going higher. A couple of things that are lighting up my tape right now. Still just so excited on my 138 covered call that I wrote on Qualcomm a few weeks ago. We really showed Qualcomm. We got it was at like 137. We sold the 138 call. We got $6 on it. We were very excited to get the $6 on it, and lo and behold, a few weeks later, it's at $204 a share, up another 6% on the day today. So with covered calls, just as coming from someone who's been doing covered calls for over 20 years now, sometimes that happens. And I can tell you the honest to God truth, I'm a lot happier with it happening this way, of it going up $80 as opposed to it going down $80 if we were wrong on it. I've been on both sides of that, and this side isn't so bad, especially when you've been on the other side of it. So that's one of them that's lighting up my tape today. The fruit company, Apple. Holy cow, looking at Apple, we're continuing to just keep going higher. Apple hit a high of 292 earlier today. It's at 289 right now. So in looking at the fruit company, there's never been a better time in the history of all Apple to sell than right now. So the fruit company is definitely on the move higher. The big debate is that maybe because Apple held off on investing so much money into AI, they're kind of sitting on the fence saying, okay, let's watch the technology develop, and then we'll just do it better when it's cheaper and more efficient. It seems like Apple's kind of being rewarded for that, or that's the news that I'm reading on Apple as to why it is going up like it is. Palantir at the 137 level, we had a little bit of pullback on Palantir recently, but overall it's still holding decent pricing. It's not near the levels where it was last October at the 200s, but it is still there. The other talk of Nvidia at the 5 trillion mark. It seems like we're right around it. We're a little bit over it right now, I believe, in terms of market cap, that is. But Nvidia is at 212 a share right now. It was up at 216. It was a couple weeks ago, but we are making we're above the 200 mark again. So in my opinion, it is a big deal with Nvidia at the 5 trillion mark, because seems to be kind of a little bit of a point of resistance to it in terms of market cap. And then, of course, we have our beloved Google. Google actually was above 400 for a little bit today. So it's back down at the 394 level, but Google going above 400, whenever you have stocks making that are the size of Apple and Google, both making new all-time highs, that's typically something that bodes well for the market. Now, as if life couldn't get any better with stocks like that making new all-time highs, it didn't do it today. But if we're referencing this week, on Tuesday, we had another stock that's a big stock like that, if you will. It's in the FANG world, Amazon. hitting 278 earlier this week on Tuesday. So we have that as well. So to sum it up, kind of like what I said at the beginning, I really wasn't kidding when I said lots of stuff went up quite a bit. And that's kind of my summary as to what's happening on the markets. I think you guys need to stay in your caves. You guys are probably the ones that have been holding this market back all this time. But when you guys don't look at the markets or go in your caves and don't pay attention to the live markets, stuff's good. So I suggest you guys just stay there.
We might have to just stay in our holes here. You're right. These are absolutely wild prices. I ran into a guy at the conference who used to be in my pit when I was out in Intel, and we were both kind of reminiscing about the wild days of Intel back in the .com days versus now, and how neither of us recognize this modern entity known as Intel. It's a completely different beast, north of $100, moving 50% in a month. It's absolutely wild stuff. So yes, a lot of wild stuff in store for us. Speaking of wild stuff, listeners, you get a treat now because people come from all across the globe, all across the globe, and they spend, I think the registration cost for this conference is $7 million at least, just for the pleasure of hearing the Flow Master do his annual state of the industry talk and analysis. And guess what, listeners? You folks get it now for the low price of $0 million. So, Mr. Flow Master, sir, the floor is yours. Regale us with your flow.
Oh man, well, I am honored to be here and to, I guess, have my position in the business. So my panel was the state of the industry, and just as a quick kind of Q1, and actually I was able to update most of the data through the end of April. And kind of give some forecasts, right? Because it's easy to see where we've been. It's interesting to kind of see how things have gone, but everybody really wants to know where we're going. So kind of some of the standouts was we're going to be seeing. I actually said 18 billion contracts is going to be the volume we're going to pass this year, which you have to think about. Before COVID, we were barely at 4 billion contracts.
Yeah, that number is just astronomical.
So it is just, it's almost, 3 or 4 times higher than, in just a few short years. So, the dynamics behind that are, kind of everything that we watch is trading more. So single stock option volume is up about 25%. Sorry, no, actually, that's the one spot that is actually a little bit lighter. ETF and index option volume is up about 25% year to date. Single stock volume currently is only up around 2%, although I'll tell you, kind of as we've had this big surge off of the March lows, that single stock volume has jumped back. So there's no doubt, we're going to see growth this year about 13 or 14%. And, last year's growth was closer to 26% market wide. So it's just, it really is an amazing time. There's just so much going on in the industry. And in my panel, we talked about kind of some of the dynamics. We currently have we have 18 options exchanges, but the next 2 are already slated for this year. So we will have 20 options exchanges by the end of the year. And there are actually somebody at the conference this year who is working for a new exchange operator, and they'll probably launch in 2027. So you'll have 21, maybe even 22 as well back, and in fact, their specialty is kind of the 24-hour trading. So, you just see a lot of evolution in terms of how the business is going. There were some really interesting conversations about event contracts, which, Cboe is going to be getting into this summer. And that's kind of the headlines on that, whether you kind of, they range from things like, what somebody will be wearing at the Grammys to, what's happening in Iran or the Strait of Hormuz to levels of the S&P 500. And so Cboe's focusing on the financial instruments, but it's a really interesting space. The last panel was my colleague, JJ Kinahan, talking about event contracts and the kind of it might be kind of boring, but the regulatory structure around that is really, really interesting too, because they're generally considered swaps. So they're regulated by the CFTC instead of the SEC, even when they're on things like equity indices, which are generally SEC controlled. So it's a wild time. We certainly dug into zero DTE trading because that still remains a big growth driver in the business. In SPX, we're seeing about 60% of the daily flows in 0DTE. Yesterday, we had a very strong market day to new highs, which were only eclipsed this morning by new highs. And SPX actually set the second busiest day ever, which was 6.5 million contracts. And which was really actually kind of interesting because the overall market was not incredibly busy. I think we traded about 70 million contracts. So we talked about the daily options that are now available in the single stocks as well. Now, they're only Monday, Wednesday, Friday expirations in names like Tesla, Nvidia, Microsoft, Amazon, Apple, those. But on my panel, I actually asked, I had Shelley Brown from MIAX, Geraldine Endo from Memex, and Annabelle Baldwin from Spider Rock. And I asked the panel if they thought it would be better to fill in the Tuesday, Thursdays on these single stock short-term options, or to add new names to the Monday, Wednesday cycle. And I think the consensus was kind of Tuesday, Thursdays might make sense, especially because then you get ETFs that use these products to do kind of yield products. And we talked about the retail activity, we talked about liquidity, and then actually one of the panels today was on flex options, which are also setting records. Actually, flex option growth is even stronger than all the other segments, basically averaging around 2 million contracts a day. And these are options that most people barely even know about, but they have very special use cases in terms of these defined outcome ETFs, which are a big trend. It basically kind of a gold mine in terms of product creation. So it's been fun. I mean, there's so much going on in the market. Cboe had a whole slew of meetings, basically back to back with participants, and the mood has been generally, very, very positive. It helps that market's at all-time highs, and most people are doing pretty well. There's challenges for sure in the market, and I think a lot of uncertainty in terms of how, some of these just new venues and the kind of the really interesting mix of risk assets and the combination of, even the crossover of sites like Kalshi or even brokers like Robinhood letting their customers access sports contracts, and what people think of that, and it just makes things really, really interesting. It's a more dynamic time in the industry than I've ever seen in my 35 years of doing this.
Yeah, I mean, just look how much has changed just in the last couple of years. And even last conference, everyone was telling me they were sitting in that exact chair we are right now because it was in the exact same resort. Like they were saying, "Oh, we're not going to see the single name 0DTEs for quite a while because of all the contract exercise and all that stuff." And then NASDAQ came along and said, "Yeah, the hell with that, we're doing it." And just now here we are, several months in, and folks seem to like it. And for the most part, I don't think anyone's blown out that I've seen so far. I think there was one hiccup with Netflix moving their earnings announcement, and so that kind of caused a little bit of concern. But outside of that, it hasn't been the nightmare that everyone predicted. And also, at the end of the day, I mean, it's not like brokers and exchanges don't have some practice doing this. They have been doing expiration trading for a long time, and even in the equities, they had the Friday weeklies for a long time. So once a week, they were doing that dance already. So it wasn't like it was unknown to them. And I know a lot of people were still arguing for the cash settled option. I personally thought that was insanity. Are you going to have two chains at the same time?
It gets pretty confusing.
Some people were saying you're going to have a Monday and Wednesday cash settled, and then the Friday is the old school physically set. I was like, that's all nonsense. You want to drive people away from this product that's exploding. Do nonsense like that. Bifurcate the chains, make it even more impenetrable. Wait, I thought I'm getting the stock. Oh wait, no, you're getting cash instead. I don't know. I wasn't looking forward to the listener questions about that. So they saved me that headache, if nothing else. So I appreciate that. But yeah, it's been a fascinating conference. I have not had a chance, like I said, to listen to much of anything outside of the last one, the JJ's panel with the events. I had a chance to chat with JJ. He was interesting. I was joking with him. He got a heck of a setup over there. He's now pretty much in charge of all the cool new stuff over there at Cboe. So he's got job security for life, apparently. So he's got interesting stuff. He's got crypto, he's got events, he's got pretty much everything new, all those crazy perps all the kids are hot about these days. You name it, all hanging out over there. So look for my chat with JJ. That'll be hitting the Pro soon, and then the network after that, listeners. It's kind of interesting to get my teeth back into some of this flow again because I haven't had a chance to really crunch the numbers all week, as refreshing and psychologically uplifting as that has been. Coming in today, we're seeing VIX, the ADV has kind of been steadily eroding. It is that early summer period, listeners, so maybe not entirely surprising that we're moving away from 1 million contracts a day. That said, it's not like it's doing nothing. 892 certainly ain't nothing at the end of the day, listeners. Putting up 325,000 contracts today, so it was seemingly kind of light. Looks like a few contracts have picked up since we started talking. Maybe this little bit of a turnaround is driving some flow. But either way, we'll see if we can hit that newly lightened ADV. If you're wondering what is the hot option out there in VIX today, how about some AUG 22 puts, listeners? About 15,000 of those have traded today. If you're wondering what's an AUG 22 put, going for $3.36. Looks like there's some AUG 65s going up as well, so it could be risk reversal, could be just unrelated paper. Those are going up about 12 to 13,000 for about 50 cents. So interesting stuff out there. SPY actually putting up some paper, 7.35 million contracts already, so more than halfway to their ADV of 11.6 million. The S 3.25 million, the ADV a little bit north of 5, so same deal there. Small caps 1.1 million, the ADV 1.7 million, and the Qs 5.05 million, the ADV a little over 6.5 million. You gonna put that out to your 100,000 streaming followers on Twitter now?
I'm gonna tweet out a photo.
I hear you're a hit with the kids on the Twitter now.
Absolutely, yeah. We had over 120,000 hits on that RMC presentation. So, yes, I will tweet out a nice photo of Mark and I recording for anybody that's following Option Alert.
Yeah, there you go, listeners. So you can see the Flow Master in all of his glory. The man who is slowly becoming the face of Cboe, dare I say it, over there. Everywhere you go around the globe, the Flow Master, front and center. Are these single name equities? Are they front and center today, listeners? The answer is that they're actually doing decent volume, closing in on 400,000 contracts right now, 390 to be precise. And kicking it off is Uncle Mike's new favorite, his beloved Amazon. 272.18 off about 2 3/4 or about 1% today. So these names actually can turn red, listeners. Number 9 is AMD. This name, his last name, AMD, was red. Not for pretty much the better part of the last month, listeners. They're giving some back to the market gods today, though. They're selling off about almost $20 or nearly 5%, trading 401.5 right now, putting up 487,000 contracts. For the number 9 spot on our countdown today, number 8, Palantir, Uncle Mike's beloved Palantir. I do believe this is his largest core holding. I think he said 100% of all customer assets and his own personal assets are all fully in Palantir. A bit of an interesting week out there for Palantir. Getting some back today, rallying 2 3/4, trading 136.5. You know, we were higher than that going into their earnings, obviously, listeners. So interesting time out there in Palantir. Number 8, 509 on the tape. Number 7, this is another one. File this one in the Intel just hard to process camp. This is Micron. This name has been on the rampage once again. 637 1/3, actually off about $30 today. So this thing moves 30 handles at a clip, listeners. It is absolutely wild. If you're bored in this market, you can't find something that's gonna run you over. Exhibit A is Micron, putting up 531,000 contracts today. Again, if you're bored with these things moving 30 handles at a clip, then you have a high tolerance for boredom. Number 6, it's Qualcomm, 201.40, up at about 8 3/4 or 4.5%, putting up 565 contracts. For the number 6 spot today, number 5, Mr. Softy, managing to retain its position and actually gain some above the PURR strike. It's above 400 again, rallying another $7.50. Trade 421.38 today. Number 5, 680. You know, you've been listening to the show for a while. They have had a hard time post earnings for a while, but getting some back out there this week. Number 4, again, this name, I barely recognize it anymore. This is Intel. 702,000 contracts on the tape. I saw it. It was 114.5 this morning. I mean, 114. It was $40 at the end of March, and that's after it had already nearly doubled from $20 back in the middle of last year, and all the way up from $40 to 114. Talk about a little bit of froth in your beverage there. Number 4, Intel, 702,000 contracts, trading 110 off about $3 today. So it can turn red if ever so briefly. Number 3, Uncle Mike just talking about this one. This name's been fascinating to watch because obviously they have a new CEO coming in, the market having a hard time processing it. It'd be interesting if Uncle Mike, if what he said turns out to be true, if the market is rewarding Apple for sitting on the AI sideline. So that means they rewarded all these other companies for pumping tons of money into AI, but now at the same time, they're also going to reward Apple for sitting on the sideline. So there you go, Apple. Well done. That's 288 and three quarters, up about $1 and a third up there. Number three, Apple 958 on the tape. Number two, it's Tesla 406 and a third. So they're back above the PURR strike as well, up $7.80 or about 2% today. They've been struggling for a while, but getting back that PURR strike today got as high as 415, almost 416 today. So wild time. I go away for a few days and Tesla blowing back above the PURR strike, 2.31 million. And then the big dog, you know what it is, it's Nvidia, 212, pretty much exactly today, up a little over 4 and a quarter out there, putting up 3.13 million contracts. Their new all-time high, 216.82. Not quite getting back there today, but pretty darn close. Right around 214 and a quarter was their high on the day out there today. Oh, Mr. Flowmaster, really quickly, I have to ask you, you're talking about your state of the industry and all your flow. Obviously, we have the numbers from April in our hot little hands from OCC. Nearly 1.5 billion, 1.44 billion contracts. I was just getting used to being over 1 billion contracts a month, and it seems like 1.5 is the new threshold, sir. What are your thoughts? You said you're going to hit 18 billion this year. That's already a ridiculous number, but nearly 1.5 billion in a month, sir. I have to get your thoughts on it.
Well, there was actually a comment by, I believe it was one of the retail brokers, Webull, and he actually, they went around at the panel and said, what is your prediction for the next year? And he said retail volume doubling. So, which means 18 billion is very conservative.
30 billion bid. Here we go.
Right. So, now he might have been talking his book a little bit.
A little bit.
But it is just, it's kind of like all of the factors, efficiency, low commissions, a bull market, which is very, very helpful for volume. It's kind of all happening at the same time. And, the geopolitical impact, April was, I believe it was a little bit slower than some of the record months, but, we're still bumping around, $1.5 billion. And, one of the things I mentioned on my panel was, so last year or, year to date, we're averaging about 69 million contracts a day. And Geraldine Endo, who was on my panel, she worked at the ISE when they launched, or, that launched electronic trading right after in 2000, when the average daily volume was about 2.5 million contracts. And we traded that in the first 10 minutes of the day yesterday. So it really, just jumps out at how active things are. And there is nothing kind of going on that's going to slow things down, because you just have more ways to access the market. You have new participants. You have even these new products, even the event contract space. It's an ecosystem, right? So, it's not an alternative. It's just another way to put some capital to work. So, and especially with the short dated single stock options that we do have out there that are averaging around 3 million contracts a day, which seem primarily additive. Maybe the longer dated flow might have come down a teeny tiny bit. But that they are going to expand that program one way or another, whether it's Tuesday, Thursdays, or new stocks. There's no doubt. In fact, I would certainly bet we're not going to see a month under 1 billion contracts ever again in this industry. It's just not. Nothing's going to go backwards. And there's a lot of discussion about regulation this year as well. And those conditions are also very, very favorable to new, innovative approaches. We can spend a lot of time debating about what we do want to kind of be cautious about and police, but the fact that new brokers are emerging and new ways of trading and basically automated AI algo trading being part of the brokerage platform itself, which we now see in a couple of the kind of cutting edge brokers, that's also just going to continue. So we talk about condor trading in the index world and some other kind of systematic, repetitive strategies that people do, and it's only getting easier. So it doesn't surprise me that we're coming in over 1.5 billion, and like I said, it's only going one way.
Wish the Weeble folks had come through my studio and told me that. I would have had a fun response at that prediction. Hey, you know what? I wouldn't be mad at it. It just it's a little talk in your book. Well, let's talk some more book fun because it is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Mr. Flowmaster, I've been busy cranking away. I know you've been busy cranking away. Oh, you do have some.
I got a couple.
I'm just gonna ask you. All right, let's do it. All right, cool. Let's get down to business then. You know, the Flowmaster listeners, he never leaves you hanging. He knew you folks needed a fix of some odd flow. So we're gonna do that. I've got some newcomers, looks like, today as well. First up, this is I love how the names are getting so on the nose now. We were talking what was a little while ago, grabyourgun.com or something like that.
Yeah. That
Now
was
got
grab a gun.
Gambling.com. What do they do? I don't know. Gambling.com. This is gambling.com Group Limited. So they're very creative with their naming. $4, and 38 cents. This is the Viceroy special, listeners. Popping 26 cents today, or over 6%. So a good day to be in the gambling.com business. But the question is, has it been a good year? And the answer is no. It's off about $1, so about 17%. But that said, it has rebounded off its recent 52-week low. It just bounced off $3.50. Looks like right back in the middle of April. So actually a little bit after the broad market nadir, this name kind of hit its bottom, and now it's been turning around. So if you got in at $3.50, congrats. You're sitting pretty out there right now in gambling.com. And Mr. Flowmaster, inquiring minds want to know, is it a good day to perhaps maybe buy some upside in gambling.com? What are you spotting out there, sir?
Well, I don't want to I've talked about options trading for decades, and we're very careful to try to say, listen, options are not gambling. People have the freedom to do what they want with their money, but we really do try not to use that term. Now, at the same time, kind of seeing the recent trends towards event contracts and event contracts on sports, which I do. I mean, we talk about sports gambling, so I would also call event contracts on sports a type of gambling. It really is kind of there really is an inflection point going on in wagering, speculation, and gambling. And this name did show up on my list as kind of an odd block. It is a relatively thin name, but the trade that caught my eye was a sweep of over 1,200 of the August 5 strike calls. And as Mark said, it's a $4.40 stock or so. They paid 50 cents in one of these multi-market sweeps that lifted the offers. The biggest piece was 1,200 contracts on the Philly, but they also picked up some on some other exchanges. I did look back at the historical volume. I mean, this is well above the average daily. The average daily option volume in this thing is only 159 contracts. So we have 1,700 contracts today, and 1,500 of those are calls. So very lopsided, very bullish. It's 10 times the average daily volume, and it is the heaviest call volume in months, about 6 or 7 months. So I think on a couple shows back, I bought some stock called Momo. That one actually worked out pretty well.
Did you get some good Momo?
I got some Momo out of the Momo, and I did get out of that trade for some profit. That was like I think I got in around 590-ish and out around 620 or 30. This one is another cheap dollar. As you said, maybe in the spirit of the Viceroy, I would buy the stock rather than the options when it's this cheap. And I did buy a little bit of stock just because I think they have earnings relatively soon as well. So I don't know, but like I said, my basic, they have earnings on May 14th. It looks like. Stock's up 7% today, and it has rebounded 25% ish or more from that $3 level. But I think this is an interesting one, certainly put on the radar. And market's near all-time highs. We've pulled back a little bit today, but I mean, give me a break. We're up, over 10% year to date after last year's 20%. And this bull market just keeps roaring higher. And that to me is kind of the right configuration for kind of looking for some of this speculative option flow and just kind of going with the flow.
I was looking at this one while you're talking. So you might think you're buying gambling.com, you're getting, all that sweet gambling revenue, but they're actually a performance marketing company for the online gambling industry. So they do
they're a service provider.
Yeah, they're a marketing company for them. So they don't get the sweet gambling monies per se, listen, which is probably why their PE is non-existent out there. That might be, people might be buying this thing thinking, oh, online gaming, I want a whole bunch of access to that space, and they're actually kind of an outside marketer to the space. So something interesting, but hey, they have a good name. That's probably accounted for half of their stock value right there. Speaking of interesting tickers, this is Hyperliquid Strategies Inc. Ticker symbol PURR, P-U-R-R. No, not the pure water filters. This is PURR, P-U-R-R. Apparently they like cats. I don't know. I don't know why a name that effectively buys hype, which is the crypto token, listeners you've been familiar with. You've been listening to our crypto rundown. It took over the number 10 spot in the coin market cap about a month ago from Cardano and has yet to relinquish it. So it's been a good little run here for hype. And now if you said to yourself, I've always wanted to buy hype, but I don't want to mess around with none of them their cryptos like Uncle Mike, maybe you want to put it in more of a securities account, then perhaps PURR. Again, I don't know why it's PURR, but nonetheless. PURR is your Huckleberry trading 666. So the number of the beast today for PURR, maybe that's a bad sign, off about 26 cents today. On the year, though, if you've been following hype, it's been a pretty decent year for hype, and that is reflected, obviously, well, hopefully, I shouldn't say obviously, but hopefully, in a token that buys it. This is effectively, listeners, a DAT for hype. So you've seen these for Bitcoin, you've seen these for ETH. They do exist now for other tokens as well, including hype. And this one's had a good run. It's up about 71% or nearly $3, about 2 3/4 over the past year. And yeah, it looks like it kind of struggled a little bit, and then in late part of the year, early part of this year, late part of last year, got down to about $3, and since then it's had a nice run. So if you've been intrigued by hype, you've been hearing folks like Bill Ulibarri and stuff talk about it on crypto, and you thought maybe this was something that intrigued you, but you didn't want to open a crypto account or deal with it. Perhaps PURR is your Huckleberry, Mr. Flowmaster. I'm going to go out on a limb and guess you spotted some calls out here. What did you find in PURR?
Well, so it is very interesting, and one of the topics it didn't come up in the panels, but something I've been talking to some other participants about is the kind of DeFi exchange universe and perpetual futures, and Cboe is working on. We're working on some. I believe we call them continuous futures, but there really is a shift in kind of how people are putting money into investing, especially at the kind of institutional level where these perpetual futures are very capital efficient. It's just a way to kind of get market exposure. But so PURR, so one of those is called Hyperliquid. That's the exchange, and this was mentioned to me by a colleague of mine a couple of weeks ago when when PURR, which is just the as you said, it's just a kind of tracking stock for the Hyperliquid, the hype tokens. But the hype tokens are used in the Hyperliquid platform. And I've been watching that platform kind of evolve. And there were some stories about, kind of some really astounding revenue. It's a 24/7 exchange that trades perpetual futures on things like oil and gold, and even the S&P 500, which is a little bit controversial. They do not have options currently, but it's something I've been watching. And I mean, I don't know, for your own, for the listeners' benefit, if you want to know where the market's going to open and you don't want to wait for the E-minis to open up on Globex, on a Sunday morning at 7 a.m., you can check Hyperliquid for the S&P 500 and see exactly where they're trading. So that's a big shift. So anyway, so I did look at it. I'm really not a huge crypto fan, but for tokens that are used in this DeFi exchange, which I really do think is kind of a disruptor in the space, I was interested. So I actually bought some of that stock, and I'm up on that. I also bought some calls, And then today, what we see is 8,600 calls compared to average daily volume of just about 3,000 calls. So now they do have earnings, and I don't understand what earnings mean if you're simply holding tokens, because you are not buying a stock in a company like the
MSTR offers. They all have earnings in some way, shape, or form, right?
I guess they do have results. I don't know. It's not the most liquid option class. So when I look at the implied earnings gap, it's kind of hard to make much sense of it. But I kind of like it as something that I want some exposure, some long exposure to. Now, it's in the crypto world, so people have to really kind of keep that in mind. But I've watched this thing. Like I said, I've kind of participated in it from under $6 to where it is now, and I see what's going on in the industry, and I kind of like the name. So and to see, I don't think there's any. There's a decent block of the June 6 calls, so maybe this is something on earnings, but 2,200 of those traded at $1.31. But that was some sort of a complex order. It's a little bit funky to figure out. It looks like maybe it was a calendar roll from the May 7th to the June 6th or something. But this one definitely, I think people should put on their radar, and and poke around at Hyperliquid, just because if you're in the markets now, you can't trade on Hyperliquid from inside the U.S., so it's an offshore exchange. But kind of like some of these other crypto exchanges we've seen, that doesn't stop them from trading a lot of volume and picking up a lot of momentum.
All right, let's roll out of here with one more here. Let's roll the bones for a little bit. Let's go out to Cognizant Technology Solutions Corp, ticker symbol CTSH. CTSH, how about that, listeners? Trading 51 3/4, up about almost half a buck today. On the year, let's see, been a rough year for them, off about 26 bucks and change, or about 33%. And pretty much the lion's share of that has been straight down this year. They had a little bit of a blip in January. They rallied back up from about 60, 70 bucks in October up to about 85 in January, then right back down again. So year to date, this chart looks even worse. Year to date, they're off over a third, about 36, almost 37%. Not been a great run for Cognizant. If you're wondering what this is an IT company. They originally were founded out of India, in-house IT for Dun & Bradstreet. Then they got spun off into this separate entity, now run out of New Jersey, called Cognizant. So IT consulting and outsourcing, listeners. And what do we spot out here with the stock today? $51.82. How about the D's 85s, listener? That's what was lighting up the tape out here in good old CTSH. Why play at a reasonable striking month where you can go all the way out to the end of the year and all the way up to the 85? That's what somebody did today. They came in and said, D's 85s, how are they? In their defense, maybe the stock was a little bit higher, 52, 58 at the time. And they got a market of no bid at 75 cents. I do love these markets. I wish I could have been allowed to disseminate a no bid back in the day. That would have been fun. But alas, no bid at 75 cents. So it was kind of a go away market. But they did not go away. They said, I will trade 5,000 for the privilege of 60 cents. I know a lot of you are screaming, oh, sold to you, I'll sell those. And it is possible. Maybe they got facilitated. They found some magical 60-cent bid, because obviously a stock at 85, a lot of people will let some go at $85.60. But it does look like these guys could have potentially been buying these, unless the market makers went from no bid to 60-cent bid, which would have been impressive in and of itself. Mr. Flowmaster, are you a big fan of CTSH? And what do you think of this? This somebody looks like maybe reaching for the stars, sir, and maybe the sun and moon as well.
Well, it is. I can see it actually looking at the Cboe open close data. It is a customer buyer, but they bought it from a firm. Market makers only sold about 700 out of that 5,000 lot. So, and it was a floor trade. So it is an upside bet position opening. I don't. This isn't the name. I don't think I've been in this name before. It is the biggest call block in looks like even year to date. And one other thing that kind of jumps out at me is yes, the stock is really beaten up. I mean, it was 66 bucks in March, and we're now around 51. but the put call skew has flattened up towards the call side. So the sentiment is definitely bullish. I don't hate it. I mean, stock, near lows, and to see that skew basically at, kind of its lowest percentile. It's in the second percentile. Maybe somebody just kind of likes it as a volatility and value trade. I think it's a good one. I'm glad you saw it.
Yeah, left off the page. I mean, these 85s, why not? That reminds me, the spot gamma guys were in here yesterday, and they tried to trick me. They said when GameStop was at its high, so around 400, they say, which strike do you think had the largest open interest at that time? So GameStop was at 400. What strike do you think? Don't forget about months. What strike? And they said, I'm the first person to ever get it right.
What'd you guess?
I can tell you. You want to try to guess first?
I
want to guess?
He's sleeping. He fell asleep because we're talking too much. I would guess 50.
50, the puts?
Yeah.
No, it's the other way. 1,000.
Oh.
1,000? I'm sorry, I was muted.
It's the height of GameStop madness. Of course, they're YOLOing for the stars, and they were. The 1,000 calls when the stock was already at a ridiculous 400. So these 85s, not quite that extreme, but they're in that same category of reaching for the stars, listeners. As now it's time for us to reach for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what the heck is on our radar for the rest of the week. And as we're coming into the end of the show, markets haven't really moved much from the start of the show. S&P off 0.5%. A NASDAQ off about 0.25%. So that one's off a little bit more. They were flirting with unched, I believe, at the start of the show. Dow off about 0.75%. Fixed cash flirting around 1740 right now. So sell off, if you can call it that, 0.5% when we're up 1,000 handles over the last month in the S&P. But yeah, so your 0.5% quote unquote sell off getting a little bit steeper, but who knows? Uncle Mike and his cabal, they've been busy on the show now. So that once the show's over, they'll go back to buying. Mr. Uncle Mike, we'll start with you, sir. What are you keeping an eye on this just extreme upside week, sir?
Well, I mean, seeing if any news can actually bring this down, which it can. No matter what they say, we're not out of the woods in the Middle East as of yet. And so continuing to watch that. And yeah, that trumps everything. No pun intended, or pun actually intended.
Let's see this headline coming across my screen. eBay permanently bans GameStop CEO for putting his community, quote, at risk following takeover. What does that even mean? You can't sell on eBay anymore? How do you ban some? Can he not buy your company because you banned him? That's hilarious to me. Mr. Flowmaster, sir, what are you keeping an eye on until we join you again remotely? Maybe you'll be beaming back in from Sao Paulo next week.
No, next week I will be happily back in New York City, where it's a little cooler than here in Florida. I mean, I'm going to be, I agree with Mike. We're not out of the woods in the Middle East, even though, oil's come down a chunk and the market is...
we are deeply in the woods still, sir. We cannot see the edge of the forest.
Yes. So, I will be, I'll be keeping an eye on that. I don't know. I think that, we've had, and my colleague Mandy Zhu wrote about this in her volatility note this week. The sentiment shift at kind of the high level has been kind of dramatic. We went from very bearish and very steep put call skew in SPX basically 6 weeks ago to we're now at the other extreme. So, trying to kind of, decide your kind of trading strategy around that, whether you take it at face value or you take it as a contrarian indicator, is obviously very challenging, but it is something to look at. And I love using kind of skew to at least kind of eliminate the suboptimal trades. So when skew is very, very flat, which is where we are right now, call spreads are cheap to the upside. Okay. At least in kind of compared to where they are. And, yes, we have a little pullback today, but it's been so strong. I don't even think VIX is even budged today. So VIX is up a nickel, 1744. So think about that. We have a 0.5% sell-off, and VIX is not really moving at all. It kind of tells you we're still in a very kind of risk-on mode. So kind of looking for where to put some capital to work, keeping your trades, manageable and a little dry powder, just being disciplined about things is really kind of my strategy, as we head into the summer, and then we'll be talking about whether it's going to slow down and people are going to go on vacation or whether geopolitical and AI and all these other kind of big themes that are taking place in the market are going to keep things hopping.
Speaking of hopping, I had to dig into the story a little bit. Apparently, the CEO of GameStop likes to sell things on eBay, including his used socks for $14,000. And apparently eBay says no more to that. So there you go.
Gross.
He's not busy enough being a CEO. He's got to sell used footwear and accessories on eBay. So there you go. He joins your category, Mr. Flowmaster. You sell used armor and he sells other used apparel items out there. All right, that is going to do it for us on this live from the Southern Studio here at OIC 2026. That will not conclude our content from OIC, though. I'll be back a little bit talking all things futures options on FIFO. And that will probably conclude us before my voice completely gives up. I will be still in the Southern Studio for the rest of this week, so you'll hear me a different Southern Studio for Vol Views and Fun Tomorrow. So that should be fun. I think I still have some voice left. But before it goes out, Mr. Uncle Mike, sir, if folks want to check out what you have cooking, where should they go? What should they do?
A couple things. I don't have any used socks for sale, but maybe I should add that to the repertoire.
Go for almost $14,000 if he's any precedent.
I'm in the wrong business, because if that's the case, man, I got a lot of used socks. But anyway, check out my YouTube channels. Type in St. Charles Wealth Management. New content is coming very soon. And if you'd like to book an appointment with me, if you're looking for a financial advisor who delves in the options space, go to stcharleswealth.com. I'd love to talk to any of our listeners.
And Mr. Flowmaster, sir, now that you are the face of Cboe, where should they go if they want to see your face?
No, I'm not the only face of Cboe. We've got a lot of very smart people. That's why I love working for Cboe. Cboe.com is really a great resource. We have product pages for our index products, things like SPX and VIX, XSP, and Russell. And Cboe.com/RMA is where we have our risk and market analytics platforms, data sets, things you can buy on DataShop. And you can always request a trial and check out what we got.
There you go. Request a trial. Cboe.com is the place to go to kick the tires and light the fires. That's going to do it for us for the option blog. Back again in a little bit for TWIFO. Back again from an additional Southern Studio tomorrow for Volatility Views. And then I'm eventually back in Chi-Town. Maybe by the time I chat with you next week, Mr. Flowmaster, I'll be back in Chi-Town for another episode of The Option. Stay safe out there.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.